Welcome back. Well, we'll be in conversation with Mr. Monu Ratra, the CEO at IIFL Home Finance, who's joining us on the show. Mr. Ratra, hi. Thank you so much for waiting by patiently. And let me apologize because there was a bit of a confusion at our end with respect to the assets. Hope you take it in good stead. But just wanted to begin by asking you in terms of the overall, this PMAY scheme, which has the street enthused. Is there something really to be that excited about? Does a lot come for the home finance companies as on account of this?
Yeah, thank you so much. And I think this PMAY, if we saw since last time when it came into being in 2015 onwards, we clearly saw a very, very robust enhancement in terms of demand as well as supply as well. And I think this is a follow-up of that was very much required. And I think with my over 2 decades of experience in affordable housing, I think we had the best run after the CLSS scheme came into being. Focus on the affordable housing from all facets. So having a resumption of that scheme, and I think this time it seems that although the finer contours are still to be out, it seems to be a scheme which is going to be focused a lot on the urban and the rural segment as well, or the semi-urban segment as well. So which I think should really help the cause because the deficit is so large that I think we would need numerous schemes like this to boost the whole ecosystem for everybody to be able to have the enhancement of the affordable stock in the market.
You can help us put that into perspective with respect to numbers as well. In the first part of the scheme which was underway, what was the amount that you managed to disburse? What's the expectation from this one? I do understand that, of course, the modalities are not out yet, but any initial sense? And also if you can help us with a split in terms of the affordable housing versus the rest of it, what does your book comprise of?
Yeah. So at an AUM level, we have an AUM of over 35,000 crores as of March ending. And out of that, 77% is housing home loans book. And the average ticket size is about 16 lakhs. So we can say very clearly that if amongst the affordable housing finance company, we would be amongst the largest in size in terms of a sub 20 lakh average ticket size segment. So we have gained a critical mass in this segment pretty well in the last decade. Last time around, we were able to give subsidy to nearly about 75,000 customers plus, nearly 1,700 crores. And this had put us in the amongst the top 5 amongst the HFCs and the banks as well. So we were able to really make the house very, very much affordable. Any which ways, 75% of our, because this scheme would have 3 criteria in the sense that first-time home buyers, which anyways over 90% of our buyers are first-time home buyers. Second is belonging to EWS LIG segment. Again, more than 85-90% of our customers belong in the EWS LIG segment. And this time around, I think there is a decent focus should be on the beyond urban areas as well. And we have expanded our footprint in the last 3 years very much into the states with over 390 branches in 19 states. So we expect if this time around we have the scheme coming, then we expect a similar or a better performance than last time.
Similar or better performance than last time, but Mr. Ratra, is it fair to assume that given since it's a government scheme, the profitability levels on this are lower than the average business, because that's the way people look at it? And overall, with respect to your AUM, you talked about 35,000 crore is what it is right now, close to that. What's the aim to, let's say, bring it up to a year from here on, a couple of years out?
Yeah. So if you see here, you see. As far as profitability is concerned, because here being a government scheme, it is not influencing your pricing decisions. You are pricing it the way you have to and what would be profitable to you. It is just that it is encouraging the buyer to go ahead and buy a house. And actually speaking, the net effective interest rate to the customer turns out to be much better. So there is no dent into your profitability per se for this scheme. Because there are no caps to put up by the government so far at what price at what rate would you be further onward lending. So there's no pressure on that. Last year, coming back to the growth, last year we grew our AUM over 25%. And we hope to continue to be at least 20% plus for the next few years. keeping the momentum and the need for affordable housing in this country. So we expect a 20% plus for the next couple of years.
20% plus kind of growth is what you envisage, but are you well funded to achieve that in terms of the growth rate that you're envisaging, or at some point of time you do expect to do some fundraise?
Yeah, so we had RDI had invested way back in August 22. They had infused for a 20% stake nearly about $280 million. So we currently the capital adequacy stands at 42%. So we are very well funded. So capital is pretty much right in the right proportion that we would need. And this year, which has gone by, we had a PAT of over 1,000 crores. So the internal accruals, along with the capital which we have, we are pretty well funded for the next 3 to 5 years. We may not require a specific fundraise to hit the market or have any push to have further capital infusion. We are good on our own for the next 3 to 5 years.
Good for the next 3 to 5 years. And Mr. Ratra, before we just let you go, leave us with respect to the outlook that you have on your NIMs as well as asset quality for the rest of the year. Is there anything that you would want to flag out? Because your GNP ratios are pretty low given it's a home loan segment, but anything that you're watching out for? Because these are those first-time buyers, the low-ticket items, so there's that bigger risk because of the lack of credit history as well. How are you leveraging technology to kind of bypass and surpass all of these hurdles?
Sure. So I think this is a very, very important and pertinent point because if you see, ever since the affordable housing space has always been, the demand has always been there, but unlocking this opportunity at scale has been a challenge for most of the housing finance companies so far. But we have taken a leap ahead and we've reached that 30,000 crores, now 35,000 crore mark. So we integrate technology to a great extent. We have a captive technology team which continues to develop the ecosystem which we want, and surprisingly, with I think the government initiative ever since for the last decade or so, the new to credit customers which we have is just about 16-17%. So it's not that these are all new to credit. The exposures might be limited, but at least we have some footprint of some financial performance or behavior which we get, and we continuously if you see, there is a stack of technology which the government for the last, I would say, 15 years has been putting out there, and we're exploiting it to the maximum, whether it's in terms of the identity of the person, whether it's in terms of using data science to unlock and understand the consumer's income levels and the future behavior as well. So we are very well set out to do that, but it's a continuous activity. We can't say that we have reached the epitome of brilliance here. But I think the way our ecosystem is structured, I think we are one of the better placed to unlock this opportunity and keep the credit costs also in check.
Working towards being that epitome of brilliance. I'm sure you're on progress to that. Thanks so much, Mr. Ratra, for speaking with us today, and apologies again for kind of making you wait. And hope and thank you so much for being a good sport and staying back for us and having this interaction.
If you like this video, then like, share, and subscribe to ET Now.